Tuesday as safe haven demand strengthened ahead of the US Federal Reserve's interest rate decision this week. For more on this, we're joined by Jameel Ahmad, Chief Analyst at GTC. Now, Jameel, the Hang Seng is leading gains in the region, rising to some 3-year highs. So what's behind this rally?
I would say it's definitely an outperforming market, and I think the catalyst behind this rally is that so far, if you consider how small Hong Kong is in terms of it being an economy that's not yet under the firing line of the Trump administration, those tantrums about different tariffs taking place in different parts of the world, Hong Kong hasn't yet been affected, but of course, there is an indirect impact here. Should we have a substantial slowdown in China or somewhere else in the region that is under the firing line of that Trump administration with tariffs, then that would have a knock-on effect. I think you also have to take into account that investors might just be looking to reallocate assets somewhere else and some portfolio diversification. Of course, the US markets have now had somewhat of a, let's say maybe a short-term correction, because previously all times the markets have gone down, investors have bought on discounts. But you do have concerns in the US right now where you've got major institutions that have upped the forecasts quite drastically for the potential or probability of a US recession this year. The likes of Goldman Sachs, JP Morgan Research, PIMCO all see somewhere between a 35 to a 50% chance of a recession by the end of 2025. If we would have rewound and had those same forecasts just at the beginning of 2025, you only had like a 10 to 15% probability. So it's clear trade tensions and these trade war fears are definitely having a drag on economic sentiment. And I think some of these market moves are just purely that, short-term market moves.
Right, and looking at gold prices now, it's peaked above that $3,000 mark for a second time in a week. How much further do you see safe haven assets rising, and how is it affecting the broader market?
I think the question to ask is how long is these trade tensions and these trade threats going to continue for? And what is going to be the impact on the world economy? Because that very much holds the keys there for opening the door for how high gold could potentially be staring at us from above. If we take into account what the trade tensions meant last time, when you just had US-Sino trade tensions, that's US-China, that tit-for-tat episode we had between 2016 and 2017, 2018, we had the weakest year of global economic growth since the beginning of that decade. Fast forward to 2025, and the US has been the aggressor, and it's battling against many different fronts. It's not just China that's under the firing line. You've got the European Union, Mexico, Canada, steel and aluminium tariffs have been put on everybody. So that means the US is spread very thin. And if we do have a global economic downturn and the probability is getting higher by the week, then gold prices are still going to be a very interesting hedge for investors during what is likely to be ongoing uncertainty.
Right, Jameel Ahmad, we'll have to leave it there. Thank you very much for being with us. Now, a quick look at some of the other top